Should I move my money? I just turned 40 and I have about $596,000 in my employer 401k. The stocks are still doing well, however I am concerned as I'm getting older if I should move my money into something less risky. 98 of my shares are in a big box retailer. I am about to start an RN job at the VAR which will give me a TSP account and a pension. I have no plans on leaving my retail job with the 401k. Thanks for any advice. You should be able to change the investments in your 401k. There will be limited options, but 98 of a 401k in a single stock is outrageous. There should be options for target date funds that allocate between stock bonds based on your age expected retirement. Good Lord, I'm behind on retirement. Wait, you're about to start a second job with the VA? Is your current job at a retailer, aka a store? Is 98 of your retirement money in the 401k at the retailer, or is 98 of your investments in one stock the big box retailer? Go check the Bogleheads Reddit. That's my recommendation, not knowing anything else. The entirety of your future retirement plan rests on the volatility of one single stock, if I'm reading that right. You have 98 of $560,000 in a single stock in a 401k? Diversify that immediately. Like today. Before the market closes at 4. You won't have to pay taxes because it's in a tax-sheltered account. There should be options in your 401k for diversified stock funds or target date retirement funds. I could not sleep at night. Switch your 401k allocation to 100 total stock market or SP 500. See if there's VTSAX VIX or similar fund. TSP has super low fees, so I'd consider rolling most of your money over there and maybe do a mix of C and S fund. I've read a lot of stories about people who keep their money in those funds and even without adding more, get good growth long term. If you want to be very conservative, there's the G fund or target retirement date funds, but honestly I plan to stay in C and S even after I retire. I don't know how 401k works since I'm not from the US, but move that money to a global index fund like yesterday. 40? You are young. You could live 50 more years. I would highly suggest reading The Simple Path to Wealth before you do anything. It's a pretty quick easy read and will give you an idea of what you should be looking for. It speaks in terms of Vanguard funds, but it's easily applicable to anywhere for the most part. Our Bogleheads are your friends as well. It's extremely risky having 98 of your investments in the stock of a single company. Diversification is a far safer strategy. You shouldn't be in a single stock. Invest in broad market ETFs and move on. SP 500 Index Fund. Don't go conservative too early, you're gonna work a while yet. I'm so far behind with my 401k lol. Unfortunately enjoying my late 30s more than I will my 80s if I can ever retire lol. Diversify your holdings into broad market low-cost ETFs. You're over-concentrated. Google Bogleheads for ideas. Move it all to the TSP. It has incredibly low fees. Like 0.04 for the C fund. Do a rollover to the TSP. Join us in our TSP and our Fed News. It seems a lot of people in our TSP do 80-20 C fund S fund. If you want to keep some stock in the retailer, do a rollover to a Roth 401k for X, the rest roll into TSP. Make sure you put your TSP contribution to at least 5. I work at the VA in an office role. My sister is a civilian nurse. Thanks for all you do. Move them across some index funds. You can keep the company stocks but shouldn't be more than 10 of the entire portfolio. I would diversify significantly. Don't do target funds, they're overly conservative. You can adjust your allocations as you get closer to retirement. If you plan to retire at 65, consider mutual funds where 70-80 of your money is in stocks and 20-30 is in cash bonds. 98 of my shares are in a big box retailer. This should not be near this concentrated in one sector. Reallocate the 401k funds. My last employer would provide various ESOP and matching contributions as company stock. It was and still is a good company, but an age-based allocation is better financial planning. Every quarter or so I'd sell off company stock and buy various index funds within the 401k. Some of those funds also held shares of the company. I'd also roll the 401k to a rollover IRA after leaving the employer, but it's not necessary. Search for target year funds. They will rebalance to meet age-based goals. The 401k administrator for my account Merrill Lynch has an advisor function that reviews, directs, and redirects the investments in my 401k account. They take into account the performance of the market and my age to mitigate risk and spread out my investments into probably a dozen or so different funds, ranging from safe money market and bond funds and higher risk equity funds. No big box retailers. Get into a few index fund at the least, not a target date fund. Employer plans can be pretty expensive between the record keeper, TPA fund expenses, and advisor of record. That being said, I've seen TSPs have incredibly low total fees. Evaluate the fee load to determine if a rollover into the TSP or an IRA is better suited for you from a cost perspective, and then diversify. You don't want such a huge concentration. Target dates are simple and require no thought, but simple indexing is likely your best bet if you're comfortable establishing it and leaving it alone. You should look for a more balanced portfolio. Balanced across stocks, bonds, etc. Having that percentage of your retirement in one single stock would keep me up at night, all night, every night. Move funds to an IRA and diversify. Look into a bond fund. You get paid monthly dividends. The yields are relatively attractive, although not much of an upside for capital appreciation like equities. The company managing your 401k Fidelity, Prudential, etc. likely offers free financial planning counseling services and will be able to help you. And when you leave your current job, you'll be able to roll the 401k over into other fund types. 98 in one company? This is one of the wildest things I've read on here. Quite simply put, 60 in index mutual funds like Nasdaq, SP Dow and blue chips. And put the other half in CDs that are now giving over 5. History shows the stock market will always goes up over time. There will be ups and downs, but in 25 years you'll be happy you did it. And keep adding to it consistently. It's called dollar cost averaging. I work for the DoD and have a TSP fund. Others may disagree with me, but I'd roll your 401k into the TSP given the TSP's low costs. And I'd put all my money in one or two of the target retirement funds so that the stock-bond ratio is automatically adjusted as you get closer to retirement. I'm willing to take a bit more risk, as I'll also have a great federal pension, so my money is in a target fund that will mature when I'm 70, 5-6 years after I plan to retire. Yeah, you should diversify. Talk to a CFP. 401ks usually become less riskier closer to your target date, but you can usually manually change it. For mine, I've put some into more secure holdings, the ones where the principal itself won't ever go down but you get slightly less return. My particular combo has about a 9.5 increase so far in the year, so you can see something similar. Don't hold individual stocks. Sell them and buy a few low-fee index funds like VU. Check fees. Go with Fidelity. Lowest fee on Fidelity $500. You have 25 years, minimum, left to save. You should stay in the equity market for a while. Can't change 401k investment. Yes. The rich person always says he sold too early. The poor person always not want to depart something should have been unloaded. I just truly want to know where you work at in retail that has such a great retirement plan, and also so I can research the company stock. Can you share? If are all in on one time to put it in index funds.